Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the gold market. So as on the euro current, as in the gold market, as we said, it's a bit too risky to take position before the CPI numbers. It's just because technical context was suggesting that it might be upward action, and in the gold market this has become even greater than we thought. It's above the intraday targets that we have specified as nearest destination point. So with the reaction that we see, it is really big temptation to suggest that it's major reversal in the gold market and strong upward continuation of the major trend that we have as on the weekly chart, as on the monthly chart. Indeed, if we'll take a look at the monthly weekly chart, both trend stands bullish. That was the 30% pullback, and from this point of view, it really could become the upward continuation here. But a few moments still exist that can't let us to make the conclusion right now. First thing is a fundamental one. It's just because a reaction on the CPI, I would call it, well, maybe not stupid, but at least not quite rational. It's just because the investors see nothing beyond of the nose actually. So because if you just see that some deflation stands in the economy with a simultaneous drop of the consumption, it's really a storm crawler of the coming recession. And from that standpoint of view, I do not see any reasons to buy stocks, for example. So, and this really euphoria that we see on the stock market. So investors see just the one thing, that rate will hold and stay and maybe you start dropping. But absolutely ignore the situation that we have in the economy, and with the rising of the unemployment, stagnation in the consumption and leading to the deflation, it is a bad combination, and very soon investors could recognize this. From that standpoint, this current reaction might be reversed in the nearest term. So if we indeed will get bad retail sales this week as well. This is first moment. Second moment, it's purely technical. So the potential of the upward continuation looks really great right now, but we haven't get yet the final confirmation of that. So current daily trend still stands bearish, and we see what will happen near the major resistance here. So because gold market likes to show the deep retracement, so it might be kind of the ABCD pattern, something of that sort, before we will get the major pullback. That's two things to keep an eye on. At the same time, if we'll take a look at the other markets, indeed potential for the performance of the gold looks really nice. So for example, on dollar index, you can see grabber has been reversed, dollar is dropping, breaking through the confluence. It means that the next logical destination point, next support is 102.50, 102.55, which is supported for the gold. But I'm more intrigued with the performance of the 10-year yields. This chart, guys, I will show you a bit later. But in general, let's take a look first at what we have on a monthly chart. Here's 1618 extension that we were considering for many time. Market has completed and now shows the downward action. So it is kind of the butterfly. So you could see the shape of the butterfly. It suggests further downward continuation, at least to the 30% support of the whole upward action, which market could retest in area around 3%, maybe slightly higher. This is 10-year yield. This pullback seems very small here on this chart, just because of the space. If I will increase it, you will see what really is going on in November. So take a look what the nasty candle we have in November, and this is, guys, a monthly chart. So with this monthly performance on the 10-year yield, which might be the reversal bar, and obviously we could get some stronger downward continuation in nearest time. That's probably also should be supportive. But what's really intriguing me, if you take a look at the 12-month chart, here we could get really big events in the long-term perspective. Maybe not immediately, but in the perspective of the 1 or 2 years. Let's take a look. In fact, we have strong downside action since 1980s. Great thrust down. Here we have, yes, we have some crossing of the 3x3, but we do not have an interruption, so it's very small retracements. Here was no close above the 3x3, here was one, and here was one. But all of them was overcome with downward continuation. So I think that this thrust is suitable for Giannopoli performance, Giannopoli pattern. If even you take, for example, the quarterly chart, you probably will get smoother downward action, because on a trading view I can't use the quarterly charts. We have the first upward bounce through the 3x3, but market hasn't quite reached the 30% resistance. If you even use these points for fib level, you will see that it also has not been tested. 553 has not been tested. So market move high above the 3x3 but can't touch it. So from that standpoint, it really might be background for the Brent beta in long term, sorry, for the double repo in the longer term perspective, and really could be big rally on interest rate yields later within the few years. So that's definitely the point to consider. At the same time, in the nearest few months, since market shows the first upward bounce after very long-term downward action, technical analysis suggests deep retracement. So as I said, it might be 3% or even lower. It is normal on any market, because market is, well, has momentum. To start opposite direction, it has to fade first existing momentum, and this happens usually with the deep retracements. So from the, and this is definitely positive for the gold. That's why I'm telling that on the gold market, overall this performance that we will get on the 10-year yield in the nearest few months, this might be really great backwind and let gold climb significantly higher if we will get really this performance that I have just described. From that standpoint, although we do not have yet the clear confirmation that this is real upward continuation, so maybe we need to see a bit more signs, but potentially it looks really interesting and really great on the gold market, and really has great potential for the upward action. So on the lower time frame, what we have on the 4 time frame chart is some kind of the widening consolidation is forming. Market is coming to the 1980. This is next and last fib resistance area on the gold market, and that's the level that we need to keep an eye on. So if we correct about possible upward continuation immediately, market will break it up and just will keep going higher. If not, then probably market will turn down right from this level. So this level will be important to understand nearest short-term direction on the market. On the hourly chart, market has exceeded all our ABCD's target based on this ABCD that we considered yesterday as well. And now we use different approach for target estimation. We use the extension on the last downward swing, which is 1.7 will be 1975. Then we get 1980, and 1618 is 1986. So this area of the 1975, 1985, that will be an important test for the gold market performance. So in the current situation, you have many options to act. So if you're an aggressive trader, you prefer to take a position in advance. So theoretically, you could try to do this because, well, market probably will try to move higher here based on the current momentum. And if you will have position, you probably will be able to place stops to the break even. If you're a conservative trader, especially because we will have also PPI numbers and retail sales, maybe it makes sense to do nothing and just see for reaction market in this area, because we are considering really long-term upside performance on the gold, and it is not vital where you will take position at 1970 or around 1980. So from that standpoint, it's not really a big deal. But if market will break it, you will get more confirmation, more reasons to consider taking the long position. So currently we're not considering any shorts by far. So that's our view on the gold market. It's really big events are coming, and it should be really interesting.